So in this video, I'm going to break down Bitcoin's 4 potential uses according to the famed investor Cathie Wood. And I'll explain what she thinks that these 4 uses mean for the future price of Bitcoin. But I'm also going to discuss some major flaws that Bitcoin has today too, because I want this to be a well-rounded debate. So you've probably heard a lot about Bitcoin by now, and you may have even been a part of the 2017 bubble like I was. I mean, I know it's a very painful time for me too. My goal in this video though is just to explain more clearly than you've heard before what the professional investors like Cathie Wood see when they look at Bitcoin. I am not going to hype anything up, nor am I going to throw around baseless claims either. I'm going to leave my emotions and my thoughts about the 2017 bubble at the door and just base this video on maths and logic. Because what is quite surprising to realize is that institutions are actually beginning to take Bitcoin more seriously. 2 public US companies, Square and MicroStrategy, have in the last couple of months bought $475 million of Bitcoin between them. Fidelity, one of the world's largest asset managers, have this month said, and I quote, "Bitcoin is a unique investable asset and that it could be a beneficial addition to a portfolio." And Cathie Wood and her team at ARK, the most successful investors over the past 5 years, they've released a paper explaining where they think the price of Bitcoin is headed based on those 4 uses that they've outlined. So the way it looks, in 2017, regular people like you and me, we were taking Bitcoin very seriously, while the institutions were not. And there was a narrative at the time that once institutions got in, the price was going to climb even higher. But unfortunately for us, that was wrong. But it's been 3 years since then, and there are indications that things could now be flipping. The regular investors, people like you and me, are not taking Bitcoin very seriously anymore after we've been scarred by the bubble of 2017. But the institutions, especially in the past few months, are now beginning to take it much more seriously. So I've recently released a video explaining what Bitcoin is, which you can check out up here, which means in this video, we're going to talk exclusively about Bitcoin from an investing perspective and what those 4 uses imply for the price. Of course, this is not financial advice, nor am I a financial advisor. Just like you, I'm just really a regular guy researching this stuff to get my own head around things, and this is just my personal research. Let's get into it. So the first use. Cathie's team believe that Bitcoin could become a global settlement system for banks and businesses. So if you've ever tried to send $100 via Bitcoin, you've probably realized that the $10 fee and the 5-hour waiting times, they're really not the best. In fact, to tell it to you straight, Bitcoin is terrible for sending small amounts of money. It's just awful at it. But if you want to transfer millions of dollars, surprisingly, Bitcoin is actually really fast, cheap, and secure. Which doesn't quite sound right, does it? Fast and cheap doesn't sound like Bitcoin. But you see, the people who make Bitcoin work, the miners, they see a fee attached to your transfer, and of course they want that fee. So if I'm trying to send $100, I might add a $5 fee. For me, that's a pretty hefty 5%, which is really not the best. But for a company transferring, let's say, $100 million, they might be happy to add a $1,000 fee. After all, that's just 0.01% for them. And of course, that's very cheap. But because the miners don't really care about who sent the higher percentage either, they just see a $5 fee and a $1,000 fee. They're going to go and approve the other transfer with the higher fee first. As a result, the other transfer should go through in under 10 minutes. Now let me tell you, sending $100 million potentially across borders with a 0.01% fee and it clearing in under 10 minutes is remarkable compared to traditional systems. And that's why Cathie's team think that Bitcoin is actually perfectly suited to the banking system, which transfers huge amounts of money in single transactions. The Bitcoin network could settle 1 transaction daily with every other bank in a global network of 850 banks. In the US alone, deposits totaling $14.7 trillion generate $1.3 quadrillion in settlement volumes between and among banks each year. So, what happens to the price of Bitcoin if it captures some of this market? Well, according to her calculations, Cathie and her team believe that if Bitcoin were to capture 5% of the market, it would imply a price of $37,000 per Bitcoin by 2025. If Bitcoin captures 10% of the market, it would imply a $75,000 Bitcoin, which will be a 580% rise in 5 years. This is what I love about this paper by Cathie and her team. There's a clear use case which Bitcoin does actually fit remarkably well. They've calculated the possible outcomes and then given us a clear indication of how this would affect the Bitcoin price based on their calculations. And as we go through this, remember also that each of the values that they've given for Bitcoin are given for that single use case alone. So when we see the possibility of $75,000 here, that doesn't factor in the other use cases yet. This value is basically assuming that this is the only use for Bitcoin. That's why there is a drop in the value of Bitcoin to around $7,000 if it captures 1% of the market. Because capturing 1% implies Bitcoin must have a minimum fundamental value of $7,000. Of course, as we go through the other uses too, the numbers can add up if Bitcoin can achieve more than one potential use. The second use that Cathie's team highlight is Bitcoin as a protection against the seizure of assets. So with Bitcoin, you have this thing called a private key, which is essentially like a password. And if you can remember that password in your head, you can actually take it with you wherever you go and it cannot be confiscated. So for people living in countries where the government may confiscate their wealth, this is obviously a big deal. Their government can freeze their bank account like that. They can also have the house raided, so any physical items like cash or gold will be taken. However, because their Bitcoin password can be remembered in their heads, it cannot be confiscated. With this use case, if people estimated a 5% probability of their wealth being confiscated and so chose to invest that amount into Bitcoin, it could vault Bitcoin more than tenfold from $200 billion of market cap to $2.5 trillion by 2025. This can be seen on our chart where we have a 1% probability, 5% and 10%. 1% implies a $25,000 Bitcoin by 2025. 5% implies a $95,000 Bitcoin, and 10% implies a $240,000 Bitcoin by 2025. Again, these numbers are just based on this individual use case as well. So if this use case adds, let's say $50,000 of fundamental value per Bitcoin, and the previous use case adds $25,000, then they would add up together to provide $75,000 per Bitcoin, with 2 more use cases to go. Whatever you really think of Bitcoin, what I find really interesting about it is that it doesn't just have one single use. It's not just digital gold. It's not just a settlement layer. Bitcoin has been described as a platypus before because it truly is a strange mismatch of different things. It might be interesting to follow the price in many ways, but what's really interesting is actually trying to figure out what exactly is Bitcoin. Because people like to pigeonhole it into one specific use. But as we can see though, nobody really knows which uses are going to develop and which won't. We just know there's several different potential uses that it could have. The third use is Bitcoin as digital gold. As part of the transition towards a digital economy, Bitcoin could challenge gold as a global store of value. Supporters often refer to Bitcoin as digital gold because it improves upon many of physical gold's characteristics. Not only is Bitcoin scarce and durable, but also it is divisible, verifiable, portable, and transferable, all of which protect it from the threat of centralization. So I'm going to chime in here for a second and tell you what I, in my uneducated opinion, think. Even though this argument right here, that Bitcoin will be digital gold, is the one that I most often see, I'm actually the least sold on it. If you think about it, there's no real reason in a way that something like gold should be more valuable than anything else. Silver, for example. Sure, we can wear it as jewelry, but we can do that with silver too. What makes gold so valuable is because we all think that it is. We've all got this weird unspoken agreement between all of us. The gold is really valuable, and so as a result, it kind of is. The same goes with paper money too. It's only worth something because we all agree it is. If we stopped agreeing that, it wouldn't be. It has no intrinsic value in a way. With a lot of these types of things, it either is valuable or it isn't. It's a 0 or it's a 1, and there usually isn't an in-between. So as things stand, Bitcoin today is highly speculative when it comes to this use, and the truth is, it's not there yet. Will it ever get there in the future? Well, in my opinion, it's either a yes or it's a no. There's probably not an answer in between. And as a result, This makes relying on this use case more risky than some of the others. But what is so cool about Bitcoin is that I can sit here and say I'm not yet convinced it will be digital gold, but I think the other two use cases we've covered already are pretty likely. You might think that the first use case, for example, makes no sense whatsoever, but these last two make a lot of sense. At the end of the day, if there is demand, it doesn't really matter which category it comes from. And that's why I think that it will eventually be quite difficult for investors to overlook Bitcoin, because when you overlook Bitcoin, you're not just saying that Bitcoin won't be digital gold. You're actually saying Bitcoin won't have any of these four uses or any other. And I think that's a much harder point to argue than just to say Bitcoin won't be this or that. So it might be worth actually rewatching that last minute, because I think that explanation right there is, for me, where the penny really dropped. Realizing that Bitcoin has so many different uses that by saying the price isn't going to go up or it's going to do this or that, you're not just saying one of those uses isn't likely, you're saying all of them aren't likely. But we are going to go with Cathie's assumption here, and we can see that if Bitcoin takes 5% of gold's market share, it would add a fundamental value of $18,000 by 2025. If it takes a 10% share, it would add a fundamental value of $42,000 in that same 5-year window. Bitcoin's fourth use is as a catalyst for currency demonetization in emerging markets. So during a spike in inflation, not to mention hyperinflation, the loss of confidence in monetary authorities typically encourages investors and savers to adopt hedges to cash and bonds. For example, physical gold and now Bitcoin. Because Bitcoin isn't subject to capital controls, it might become an important savings vehicle in emerging markets. While Bitcoin has not evolved enough to service an entire economy, we believe demand for Bitcoin in emerging markets should increase as its infrastructure reaches critical mass. And if Bitcoin were to capture 5% of the global monetary base outside of the four largest currencies, its market cap would increase by $1 trillion. On a chart, we can see how this looks. If Bitcoin captures 5%, it would imply a $58,000 fundamental value for Bitcoin by 2025. If it captures 10%, it would imply a $115,000 Bitcoin in that same 5-year window. So those are the four uses. Now, if we add them together, what does that mean for the price? Well, Cathie's team aren't going to use the highest values from each four potential uses, because if we're being realistic, it's unlikely the Bitcoin is going to achieve all four potential uses in just a 5-year window. Instead, Cathie's team believe that a more median potential for the next 5 years would be a $140,000 Bitcoin with a $3 trillion market cap. And at the time they wrote this paper, that would have been a 14 times return. With Bitcoin around $11,000 today, that number is closer to 13 times as I'm recording this, but still, if they are correct, 13 times in 5 years. So Cathie's team, they then simulated 1 million portfolios and added Bitcoin to see what effect it would have on the portfolios. Before I show you the results, I actually want to throw some quick facts at you, because this chart shows us the average Bitcoin compound annual return. If you held Bitcoin for the last 7 years, it returned 90% on average each year. For the past 6 years, it has returned 70% on average per year. Even just holding for the last year has returned 22%. When you look at these numbers, they are quite incredible, and yet so many people have lost money on Bitcoin. Something doesn't seem to quite match up, and it's because Bitcoin's price historically has played out in cycles. What we can see here is the price of Bitcoin between 2015 and today. The first phase is the slow build-up phase, and the price slowly begins to rise. As momentum builds, the price climbs quicker. More and more people flood into the market, and the price explodes at an unsustainable rate. Then the bubble bursts and the price crashes. Unfortunately, most people usually invest right around the top of the bubble and sell in the months afterwards. This is why so many people have lost money on Bitcoin. And yet, if we look at the whole chart, we can see that the people who have held from 2015 to today have also experienced a huge crash, but the price hasn't crashed anywhere near the lows of the previous cycle. In fact, if we zoom in, we can see the price of Bitcoin in the second half of 2015. It averaged around about $350, and to give some context, with Bitcoin at $11,000 today, that is a return of 31 times for investors who have held for the last 5 years. So what I'm trying to say is this: timing any market is an absolute nightmare, but trying to time a highly volatile market which has historically played out in cycles, it's downright stupid. There's a reason that everything in this video has been based on investing for a minimum of 5 years. Please, 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 please do not overlook how important that point is. So with that in mind, let's have a look at what happened when Cathie and her team simulated 1 million portfolios composed of various assets, including real estate, commodities, currencies, bonds, stocks, gold, and then they added Bitcoin. They found that the ideal amount of a portfolio to allocate to Bitcoin is 2.55% when trying to minimize returns and minimize volatility. When simply trying to get the best outcome and actually accepting higher volatility, the result was as high as 6.55%. Next, they used the assumptions of Bitcoin's potential growth, which we've discussed with those 4 use cases throughout, and the ideal allocation now falls somewhere between 4.8% and 25.78%. I'm going to begin by saying that allocating 25%, a quarter of your portfolio, to Bitcoin it's probably too high. The 3 other numbers, though, do sound more interesting: 2.5%, 4.8%, and 6.5%. A range, let's say, of 2 to 7%. Again, these aren't any numbers that I've come up with myself. I'm just breaking down this paper written by Cathie's team for you. So I think I and Cathie and her team have done a decent job at this point of giving real concrete reasons why Bitcoin has value. And I've shown you those simulations which produce specific percentages of a portfolio that someone could allocate to it. Now, I think to be thorough, I need to tell you 2 more things. Number 1, the risks of investing in Bitcoin. And number 2, I'll finish up with how to invest. So when it comes to the risks, what you really have to remember is that Bitcoin has only been around for just under 12 years. It's very new and it's very volatile. This also means regulation is a risk, as many governments haven't yet decided how they're going to approach it. There's what's known as custody risk, which means that you need to keep your private key, i.e. your password, extremely safe. More on that in a second. And there is the risk of over-institutionalization. As more companies begin to keep Bitcoin safe for people, there is concern around them holding such large quantities of what should be a decentralized asset. In my opinion, though, the single biggest risk is for anyone who invests and sells in a small time window, because historically Bitcoin has rewarded people who hold it through the ups and downs and through those cycles, and punished those who overinvest at the top and then panic sell when the price begins to dip. So with all of that said, I'll share what I would say is the best way to invest into Bitcoin. If you're new to it, I don't think it's a good idea to overload you with information, as to tell you the truth, it can be really quite confusing at the start. The best way to get started is just to use a company that will allow you to buy Bitcoin and they'll keep it safe for you. In my opinion, safety is of number 1 importance, and the company with an incredible record of keeping their users' Bitcoin safe is Coinbase. There is a link to them in the description below if you'd like to check them out. What I like about them is that you can buy Bitcoin and they'll keep it safe for you automatically. Coinbase is where I started, and I still think they are the most safe, user-friendly option for beginners. For many of you, this might be enough, and you might just leave your Bitcoin on there, so that might be the only company that you need. Personally though, I would encourage you to start there and then keep learning about Bitcoin. Someday, you may want to begin looking after it yourself instead of leaving it on Coinbase. If you do go down this route, what you'll want is a hardware wallet. And a hardware wallet is basically a little device which keeps your Bitcoin safe for you. What's great about a hardware wallet is that your password always remains on the device, so it's much more protected. Again, in the description, I provided a link to the wallet that I would recommend and the one that I've personally been using for several years. It's called the Ledger Wallet. It's really user-friendly and it's very, very safe. For me, Bitcoin is truly fascinating, as we've never seen anything quite like it before. I don't know if I fit into the category of people who say it will replace gold, but I know I definitely don't fit into the category of people who write it off either. When I look at those 4 uses, I think that Bitcoin has a very strong chance of achieving at least one of them, and probably more. And if that's true, once you look at the maths behind each of those uses, what does that mean for the price? Well, let's just say I think that it's hard to overlook. Again, based on maths and data, not emotion or anything like that. It's also hard to justify investing too much at this point in time until it's more established. But that's just my personal thoughts on it. I hope you've enjoyed this breakdown. Make sure to subscribe for more videos just like this. Check out this video up here. And of course, just thank you for watching.